Oh, no. We're not done just yet. One more day left this week. Got Non-Farm Friday coming right around the corner. Well, it's back to work tonight, Thursday evening. Hope you guys made some money out there today. But it's back to work, getting ready for Friday's trading session. We get some big news tomorrow. One of the biggest news reports of the month coming tomorrow morning. And I got a bunch of ranges on the charts. You know how much I love some range-bound markets. We have a lot to talk about tonight. Get a lot of great trades we're tracking to finish up the week on Friday. I'm going to cover all my favorite trade setups in tonight's video to make sure you have a game plan to make some money going into the weekend. As always, before we jump in and get this video going tonight, make sure you subscribe to our channel so you don't miss tomorrow night's video upload. So make sure you subscribe. And if you enjoyed the video, do me a favor. Will you hit that like button? I appreciate you guys supporting this YouTube channel. But enough of the intro. I'm a little bit behind schedule. Let's get ready for Friday. Non-Farm Friday coming. Another big news report this week. The Fed announcement coming out yesterday. And of course, tomorrow, we've got another big report coming tomorrow bright and early as well. Everything looking pretty bearish right now. Markets continued their sell-off after yesterday's FOMC big drop. Bear market right now in the S&P. Bear market here on the Nasdaq. Bearish, of course, here on the crude oil. We got a bunch of ranges on the charts. And so anytime we see trading ranges, right, we're thinking about breakouts. We definitely have some bear breakouts going lower on my radar right now. And you have to think we've got some fake outs, right? Some fake out breakouts are always one of my favorites in a range. I can easily see fake out breakouts off the lows here right now. Be aware of that. We'll talk more about this tonight, obviously, as we go deeper into the video. And I think possibly the best fake out breakouts will be the breakouts going higher, because in all reality, we never really got that deep pullback that we talked about in last night's video. All of these markets have really some great failed breakouts, some head fake trades on my radar for tomorrow. I'll put together a really good game plan, a good roadmap for you to make some money on Friday. Now, speaking of Friday, again, tomorrow's not your average Friday. We got one more big news event tomorrow. It's at 8:30 Eastern time. That employment number comes out, also known as the non-farm payrolls. Now, be aware of this. This is a very big news event. It's not as big as the FOMC announcement we saw yesterday afternoon. But, you take away the FOMC announcement, and that's going to be the biggest news report of the week. It's a very, very big news report, biggest of the month of November outside of the FOMC announcement. The two key things I always kind of think about whenever I have non-farm payrolls is, first of all, be careful overnight. A lot of times the markets will be pretty slow, pretty quiet overnight as everyone waits for that non-farm number tomorrow. So as I always say in these videos, trading is like riding a bicycle. It's much easier, to keep your balance when it's moving, right? So it's easier when it's moving. Hopefully I'm wrong. Hopefully it's a very active overnight session for everyone in Asia and, of course, in Europe. But oftentimes it is pretty slow, so don't force it. And then also keep in mind, too, that number at 8:30, it's a big deal, right? So this markets may get pretty whippy around that 8:30 number. I try to sit on hands until about 8:45, 8:50-ish. A lot of times we don't find really good, clean setups until after the U.S. Open at 9:30. So, that 9:30 to 11 o'clock block tomorrow probably going to be where we'll find the best entry setups tomorrow morning in the markets. Obviously, we'll take whatever the market gives us, right? But be aware, it could be a bit slow overnight here, and it could be a bit choppy in the pre-market tomorrow. That 9:30 to 11 o'clock, if I had to guess, is the time you're going to want to be at your desk. Also, too, don't forget, Fridays are always kind of a smaller window of opportunity. You got to have a good reason to be trading late on a Friday afternoon. So get there early. Be aware of that news tomorrow at 8:30. And of course, we're going to come back next week. We'll talk about that big election coming in play next Tuesday, right? Got a big election coming here in the U.S. on Tuesday of next week. So we got a lot more to cover next week. But first of all, let's make some money tomorrow, though, right? Let's make some money for the weekend coming up here. S&P's ready. Nasdaq's ready. Crude's ready. I'm glad you are here ready as well. Guys, I'm going to cover all my favorite trades in this video tonight. Make sure you watch all the way to the end, because you will learn different trade setups, discuss different tactics as I go deeper into this lesson. And as always, I try to save the best stuff all the way to the end. So I'll give you a reason to stick around all the way to the finish. Let's go S&P and SPY. We'll go NASDAQ, QQQs, and we'll wrap things up here on the oil and the USO here tonight. Now, a couple of things here. First of all of these charts are tick charts. You can see the time frames in the upper left-hand corner. You are more than welcome to use a time chart along with this. I think tick charts make everything a whole lot easier. I talk about how to use tick charts in our free trading courses on our website. Also be aware too, the Emini and the SPY are very similar to the NASDAQ and the QQQ, so they're very much interchangeable. One can be applied to the other and vice versa. So keep that in mind as we start with the S&P. This really could be the NASDAQ as well. Now, moving on here, there are three key insights right now that are tipping us off to the best trades for tomorrow. The first one is a bear bias. Last couple days, we talked about this last night. Let's look back the last few days here. It's very difficult to call this a bull market right now. And with that continued sell-off that we saw yesterday and not really able to get that squeeze we're hoping, we mentioned in last night's video, there really is quite a bit of bearishness right now in these markets. And what that tells us is, it tells us that bears would love to get some breakouts going lower. It tells us that the bears would love to gobble up some bull failures, right? Some failed bull breakouts going higher. One of my favorite trades is that big pop and that drop back down again. So bears would love to get that big pop and drop it back down. They love to get that breakout down to that seller objective 36.41 half. That's what the bear bias tells me. Second key component right now is that strong move down. Anytime we see a strong move in one direction, what do we expect? We expect to get a deep pullback and a retest of, in this case, of that low. Now, once we get a retest of that low, do we see sellers struggle and bounce back up? Undoubtedly to create a trading range where we then start buying low and selling high. Or do we see these bears push through that low? And we'll talk about some breakout patterns I'm looking for on that. That's what clue number 2 tells me. And then, of course, you've got this slightly bullish range, right? You'll notice it's a slightly bullish move into that trading range. You will see this is one of the biggest differences between the NASDAQ and the S&P tonight. Now, when I have a bullish trading range, a bull trading range always tells me to look for entries off the low, right, at support below the low, and looking for breakouts going higher. I like the idea of the reversal off the low, right, that double bottom reversal we talk a lot about on these videos. What I'm hoping though is I'm hoping that this bull breakout up top will run into some problems and fail back down again. So very interesting clue there on this bullish range. And you'll see the NASDAQ is going to be a lot more bearish here, which may end up dragging this S&P down along with it. So knowing what we've talked about so far, in situations like this, what normally happens is that strong move, they're going to want to go back and retest, right, and retest the low. So what we'll talk about right now is, I'll talk about now as we go lower how to buy it, how to sell the breakout, and then later on in the video, we'll talk about the move going higher, because again, I think that could be one of the best trades of the session here for tomorrow. Now, if we do get this run going lower, let's get rid of that. Get rid of that channel there. That channel is only there for pretty much some miscellaneous analysis there. The key aspect of this, as we go lower, there are two things I need to be aware of. One is the bearish momentum involved. So if I want to be a buyer down here, I have to do a very good job at trapping in some of the sellers, because we have so much momentum right now for the bears. In order for me to get a run going higher, I need some sort of juice behind it, right? I need a catalyst, and that catalyst is going to be running stops. So I really need to get the bears to come in here, try a couple times. I like to use what's called the 2-try rule as signs of exhaustion. We talked about that last night on the video. So I want to see 2 tries, but there's also one more problem, and then there's a trend line coming down, right? You'll notice that trend line. That trend line is what? It's an overhead level of resistance. So if I want to be a buyer off of this low, what I would normally normally do is simply look for those bears to try twice and simply think, where are their stops, right? Just buy into their stops. But as you can imagine, with that trend line overhead, that really puts a big damper in that setup. So now we have to go a little bit further, right? We've got to get now underneath that low, and we have to get what's basically called a trap entry off of that low. This is a very specific entry pattern. It's a seller failure because we're going against the overall momentum. It's a two-try failure because we're so bearish, and that trap is going to be the real key to this, because again, you don't want to buy it as it's going higher. You want to buy it as it's technically going lower. Now, what I'll do is I'll look for a nice strong signal candle coming off that trap, closing above the moving average. Not to worry, we talk a lot more about signal candles and these entry setups in our free trading course, which you can join on our website. We'll talk about that here as we go. That's the safest way. It's the only way I feel comfortable buying off that low. Not my favorite trade, right? My favorite trade going lower is going to be a breakout, right? Going to be a breakout. Here are a couple breakout patterns I'm going to be keeping on my radar for tomorrow, and you'll want to keep these in your toolbox as well. We know we're likely going to go down and retest that low. As they retest the low, now let's say we pull back to the moving average, the 21 EMA, and let's say now the bears don't try twice and fail. No. They come in and they blast this sucker, and they really jump off that moving average and clear well below that low. We call these 1, 2, 3 breakouts. And once I see that strong move down, that strong move also comes into play again. I'm now going to find my new entry. I'm going to mark a trend line off that low. I'm going to find a channel off of that high, right? So I draw them backwards. And then one of my favorite trades on this is to look left, find a prior swing, and if I can get above a prior swing, this is where I start. What I'll do is I'll drill down to a faster time frame tomorrow morning in the trade room. I'll look for a trap above a prior swing. Buyers will come in, try to buy that pullback above the 21 moving average. When they do, that becomes a failure setup. Those failures, they oftentimes lead into pullback combinations. And then keep in mind, the next target going lower, right? So again, traps, failures, pullback combos, same entry patterns you guys learn more about in our free trading course. Where's the target down here? We know where that is, right? We know where it is. I've got 36.55, 36.41 half. That will be one breakout to keep on your radar for tomorrow. But here's one more, okay? This one seems to be probably more likely. We take out that low now, and now we don't pull back and jump. Now what happens is we grind down, right? A Friday morning, non-farm Friday, it could easily grind its way lower. When it grinds down like that, the grinder is the giveaway. It is. You want to mark off a trend line now off that low, bring it up around that big high. And again, I'm going to look left and start finding those prior swings. I want to get up above prior swings, again, for things like traps, above the moving average, for failures, and then grab that pullback combination. Again, these are all the same entry patterns you guys learn in that free trading course, which reminds me, I'm talking a lot about the free course so far. I know most of you guys and gals have taken the free classes. You've learned the setups. I love getting emails every couple days of you guys making money with the setups, all off the free course on the website. But listen, if you're here for the first time today, if you haven't taken the free class and learned this simple strategy, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take the free trading course on the website, learn that strategy, because the strategy I teach in that free course will teach you how to find the easiest winners. It'll make it really easy to avoid losses. And my favorite part of it is it'll give you a game plan, right? So you know what to look for, what to do at each stage of the market. If you're serious about your trading, if you're sick of missing the best trades each day, if you're trying to make the jump into full-time trading right now, that free course will give you an easy roadmap to follow and start making some money in these markets. And let me know how you do too. I really love getting those emails from you guys every week about how much money you're making off those setups. So keep them coming. Now, one more thing you want to keep in mind, right? Let's say now the market takes out that low. we pull back and we get a really, really strong move down. If we see a real strong move down, keep an eye out for those strong moves, those shallow pullbacks, and those lower lows, right? Strong move, shallow pullback, lower low in price are those traps. So as the market, if the market, again, takes out that low and we really see that really strong shot, right? That really strong shot going lower, this is one of my favorite breakout patterns. It is a very specific setup though, so be aware, right? It's, again, strong move. It's a lower low, strong move, shallow pullback, right? Lower low in price, and that trap. You'll see a lot of examples of those, of course, right inside that free trading course as well. So keep your eyes open on some of those breakouts. There are a few more breakouts we keep on our radar, but I'll leave for that right now. That's probably the most likely scenario that we see here for tomorrow. Now the big question is obviously, what if we go higher? Right? What if we go higher here? What if we jam off that low and go higher? Right? What if we don't retest that low and go higher? Let's talk about this now on the Nasdaq. The S&P, of course, we covered half the game plan. Now let's think about over in the Nasdaq here. Let's think about now the game plan as we go higher here. Okay, same idea here on the Nasdaq. We have 3 key insights. They're the exact same, right? Bear bias, strong move down, and of course that bearish trading range. You'll see the Nasdaq looks a whole lot more bearish right now than the S&P does with that trading range, right? It's pretty much a bear range, whereas the S&P has that slightly a little bit higher up range there, which really gives those buyers a little more opportunity to buy off those lows. So we know what's going on here right now. We know that trend line coming down is going to be an issue. So being a buyer, we're going to want to grab that 2-try with a trap off that low. Let's say now we make that run going higher. Okay. The most important thing, and as I mentioned earlier, is it's a range. So I want to find levels of resistance up overhead, levels of resistance up overhead. And I'll tell you, we may see the most important clue right now is that if we go higher right now, this will be what we call rotation off the low. And basically what it means is we're rotating from below the trading range, which, as you guys probably have learned before on these videos, creates a very strong move going higher, right? It really does. In fact, these kind of pendulum swings off the low, right? These rotations off the low sometimes will produce a strong enough move to really shoot the market all the way to that trading range. So you really got to be careful if and when the market rotates higher from below a range. So knowing that, right? Knowing that, how am I going to trade this? Well, it's relatively simple. As we go higher, because we know we have all of that bullish rotation, the good news is that trend line down here off that low will be very, very small. So we're not going to have to deal with that trend line coming up, right? Look back at the S&P. The S&P on this, if we go higher right now in the S&P, there will be that trend line to worry about, which, remember, means what? It means traps, right? Traps are going to be your best entry, and I'll talk more about that here in a moment here on the Nasdaq. So Nasdaq goes higher. Lots of bullish momentum now as it comes off that high. Great place to be a seller. Great place to be a seller. And again, we never really got that deep pullback that we were expecting. We talked about this in last night's video, right? This whole move down today was just a continuation from that big move from yesterday. So anything that pops up right now, you have to think the bears are going to be seeing that as a selling opportunity. The bottom line, though, is as we go higher, I want these buyers to confuse this for a reversal. Let them try a couple times. Now, I would not look for 2 tries on this if we weren't rotating off that low, right? Remember, there's a very big difference between a bear move into a range that pops up. I can be pretty aggressive on those. But once we go below the trading range and we begin to roll higher, that's where things get different. That's where things get a lot more bullish, and I have to respect that momentum. That's why as I go higher, take out some of these highs, get up into some of this overhead resistance, I want to get that 2-try failure. I want to let those buyers try once. I want to let them try twice. And once those buyers try a couple times, I think, okay, where are their stops, right? Where's their pain? And that's where you want to look for that short going right back down. Grab that signal candle, get that short triggered, and we're trying to go right back down into that trading range. That's a pretty easy one. The key is up into resistance, time the entry by looking for signs of exhaustion of those buyers. Now, we may see those buyers hold, right? The buyers may pull this thing back and they may jump this thing as we go higher. In a lot of conditions, this becomes a reversal. This becomes a breakout and we can buy that pullback. Not exactly the right game plan in this situation right now. Why? Because of that huge move down. You can look at this thing, right? It's huge. So it's easy to see if we were to get this pop up, it's very difficult to want to be a buyer at that stage. This is where, though, we're going to have a lot more concern about the buyers and their momentum. So think about how the situation goes now, right? We pop up, the buyers come in, they hold that pullback, and they blast it, right? We end up all the way up into overhead levels overhead. What's my concern? My concern is momentum. Whenever I see a real strong move in one direction, what do we expect? We expect a pullback, a retest, then we can be a lot more aggressive going lower. So before we get that retest, this is one of the most important parts of picking tops and bottoms and timing reversals. We do a lot of stuff like this in our trade room. The most important thing you want to do, though, is, again, we want to trap in some of those buyers, but because of the strength of that move, we have to look for what's called a crown reversal. Now, why a crown reversal? Why a trap high for the entry? Because you have to remember that the stronger it goes, right, the stronger it is, as it pulls back, you'll get more buyers coming in. So I don't want to be caught selling low. I want to sell as high as I can with what I call a crown reversal. And of course, the objective now is to go back down into that trading range. Another trade, though, that I'll keep in mind is, of course, that double top reversal. So let's say they run it up, right? The buyers bring it back now and they retest that high. Wonderful. Mission accomplished. Now we can be a whole lot more aggressive on that short. I still want to use the 2-try rule because I still need to remember, we're still short-term bullish. I'm a short-term trader, so I want to make sure that if I'm going against that short-term momentum, I want to trap in those buyers and use their stops. Now, the good news in this one is again, we don't need to be as patient with that crown reversal. We can trap in those buyers, use those stops as fuel. The easiest money you're going to make in a bear market is getting up into resistance above the range, trapping in those buyers, and selling into those stop losses. Now, remember, once that failure triggers and we drop going lower, the fun is actually now just beginning as we go lower, because now what I can do is I can go out and find a new trend line off that low. I can mark a channel off of that high, right? I can drill down, and as we always say in our trade room, for all the students out there, what do I always say? First test is the best test, right? You want to grab that first test after it turns off of that high. And obviously, I'm simplifying things right now. This could be a trap. It could be a buyer failure, right? You won't need a 2-try there, but just a regular buyer failure, right? And a pullback combination, possibly a strength trade as we go lower. And again, if you're not familiar with those entry setups, grab that free course link that I dropped in the upper right-hand corner, and you'll get, there literally are hundreds of examples of those in our free trading course. So again, we pop up. As we go higher here, it's going to be either that crown reversal with that trap, or it's going to be that retest and then the 1-2 back down and we start looking for that channel, right, and drop it back down again. One more that you want to kind of keep in mind here, because it is such a big bear move from yesterday, we may get one of those V-top reversals, right? It may pop up. There may be so many bears up there that we don't get anything off the moving average, right? The market may simply go up and come right back down. These do happen whenever we've got this quite obvious big wide open space above us. You can imagine, right? There probably are a lot of big deep pocket bears up there with their orders just waiting to sell that bounce right now. So we may not get that beautiful failure off the high if all we get is a V-top. V-tops, by the way, are one of the hardest to trade because you can't really, not with a small amount of risk, you can't. You know, if you're willing to take a rather large amount of risk, if your risk tolerance is very high, my kind of specialty is helping my students make money without a lot of risk. And so it's very difficult to just sell into that and keep your stop small, right? So if you're like me and you're trying to risk small to earn large, the way you trade a V-top is you look for that grind going back down, which will almost always happen. Draw that trend line off the low, bring it up around that high, right? See what I'm doing here? And then you look for a trap, right? Traps are almost always going to be the best entry when it comes to those V-tops, right? Kind of that V-top or V-bottom. This is a V-top example right here. And again, I'm keeping it simple right now. This could be a trap. It could be a buyer failure. It could be a pullback combo. Same stuff you guys have learned, right, in the free course. All right, so keep your eyes on those kind of three scenarios as we go. Very difficult to envision this market completely reversing tomorrow. Hey, anything is possible. We'll talk game plan on that tomorrow morning in our trade room if it does end up holding that and reversing tomorrow, but that would be a pretty impressive move here for the buyers. So now we've got a pretty good game plan, right? Now we know how to trade the fake out breakout. We know how to trade the breakouts going lower. We know how to trade the moves going higher here. Remember, most important thing is non-farm payroll tomorrow morning, 8:30, right? So just be careful around that news event. Over on the crude oil getting dragged down today, probably a little bit of empathy, a little bit of a empathetic move lower along with the rest of these markets here today. There are three key insights right now on oil. One is kind of the overall bigger picture, or what I call the 2-day setup. If you kind of zoom out here right now, a little bit wider here on this chart, you can kind of see what's going on here right now, right? We had that big run up that we had, what's that, 26th, 27th of October. We get that deep pullback. They go up, they retest the high. They, of course, were not able to break through that high up to that 95 next big round number. And now we've got this market now kind of rolling over, and think about now where they want to go, right? We talked about this earlier. Anytime I see a very strong move in one direction, we expect a pullback, a retest. Once we retest, do we break out higher? Apparently not. If we don't break out higher, where do we go next? We try to make our way down to the lowest part of that deep pullback, and that's where we expect these bears are trying to head to next. So where would that be? It's all the way down at 85.5, right? That is our big objective now for the bears. That's what the bigger picture tells us right now. If we zoom in a little bit closer though, right? A little bit closer, you'll notice there, of course, is that trading range, bull market into a trading range. We break out, and again, you'll see, right, we're now rolling lower, and we're kind of sitting right on that low right now. So knowing all of this information, we get some support below us, right? Big open space. If they can break below that 87.5, 87.52 rotation. Now, let's get more intimate here now, right, with the short-term momentum. So next clue, bearish market or bearish range with rotation. Okay, this is a pretty easy one. We get basically a bear move down into a trading range. And we have what's called rotation, right? We talked about rotation off the low on the NASDAQ and the S&P, right? This, my friends, is rotation off the high, right? We pop up, the buyers fail, and now we rotate back down. Okay, the bears, they're going to want to what? They're going to want to rotate down roughly about as much as we went higher, right down below. Now think about it. At that point, do they hold and back up into that trading range? It's possible. It's possible. Doesn't seem very likely because of the bigger picture we just talked about. Or do we break below it, right, and break out? This is what I call these possible, well, my kind of nickname for them are slingshot breakouts. We go into a trading range, we pop up, right? Bears, of course, come in, and now as that momentum rotates off the high, oftentimes, again, like I mentioned before, in the opposite direction, of course, on the S&P and Nasdaq, that's a lot of bear momentum, right? And these have a tendency to really pop and blast, right? Kind of like a slingshot will slingshot that market running lower. All right. Now, there's one more thing that it might not be a key insight, but it's something that you want to be aware of on oil. And this is a good lesson to learn. And that is beware the failed retest. So, for example, right, we have that bear move down. We expect them to want to retest that low and keep going. What if they don't, right? What if the market now, what if they hold and they jump back up now? Now we have that trend line coming up. Now, we talked about trend lines earlier. That trend line tells me what? It tells me that if I want to be a seller up here, I've got to be careful. Why? Because that trend line is, well, it prevents me from getting a clear line of sight back to retest those lows. So what do we always talk about? Whenever we deal with trend lines, we look for what? We look for traps, right? So traps become the key entry here because of that trend line. It's kind of the same idea we talked about on the S&P earlier, but it was the long side, of course, on the S&P, right? So that's going to be one factor as well. At this point here, kind of knowing what we've talked about here so far, it's a relatively easy game plan to put together, right? As we go lower, the bears can, if the bears struggle, the buyers can try to nibble on this thing back to the upside, but the bears would love to get that breakout going lower. If the market does punch up, we look for shorts at resistance above using traps back down. And if we get that really strong reversal back up, we find ourselves back up where at major resistance. And what were those three reversal patterns we talked about? What were they again? Remember, it was the up, it was the crown reversal. Why? Because momentum, right? Crown reversal back down. It was the up, the double top reversal, which again is the 1, 2, and then find that new channel, right? Remember this from before? Back down again, right? That's the game plan for that one. Or it could be the up and the V top, exactly right, into that breakdown, find that grinder, and then, of course, grab your traps, right? Grab whichever entry pattern we can get off of that high, right? So that's the game plan as it goes higher. And of course, right, if we do go higher, and for some reason the buyers hold that pullback and they blast, right? We then look for one of those breakout patterns, right? Let's talk about breakout patterns, right? I'm not going to go over the upside right now, but let's talk about going lower here, right? So the breakout patterns we'll talk about here right now can also be applied going higher. We talked about the breakout patterns earlier on the S&P. What were they? As they go lower, they retest the low, they pull back to the 21, and they what? And they blast, right? They jump right off the moving average. They blow right through this area of support, 85, right? 85 half level. We talked about that big bear objective. Now we find that channel low, find that channel high. We drill down and we don't miss that first test. And again, this is a 1500 tick chart. We're going to drill way down tomorrow morning, and we'll use a much faster time frame to actually time the entries off the high of that. Again, this 1, 2, 3 breakout pattern is definitely on our radar going higher, but again, they've got to hold it through that big top that I mentioned there before. Another one would be that pop and grind, which again would be very much kind of expected on a Friday morning after non-farm payrolls. Strong move down, pop and grind tells you draw that trend line off that low, bring it up around those highs, right? Find those traps, find those prior swings, and get that first test off of that low. Where's our objective again? Our objective, of course, is that breakout going lower, 85.30, 85.92, right? That area down below. Or we see a really big drop, right? Strong move goes lower. What was it? Shallow pullback, lower low in price. Traps, baby, right? One of my favorite breakout patterns, that 2-try breakout. That's what you want as we go lower there. And keep in mind too, right? If you can find a channel, use that channel, right? Not 100% required, but if you can find a channel, definitely use that channel as well. All right, so now we get a pretty good idea here as we go lower. I'm not a big fan. This would definitely be a situation where a 2-try failure is the buy side here. I'm not a huge fan of that trade because of that momentum coming off that level, and again, because of that kind of bigger picture that we saw here. But again, they might hold this. There's definitely a chance they might hold this. It may hold off that low, bounce up, and we'll shorten that thing back down off that high. Right? I just want to make sure that we focus on the most reliable trades, right? The trades that are the most potential for being a winner, right? There's a lot of trades we could look at right now, but in my eyes, I would rather take fewer trades, but have them be a high winning percentage. Again, my kind of specialty is helping new traders kind of get their account growing, right? Get making money by taking low risk, high reward trades. And so I'm very specific about the ones we use in our trade room. That's why I try to focus on what is the short-term momentum, because when you go with that short-term momentum, it just makes everything easier. All right, guys, now we have the game plan ready for tomorrow. Don't forget, 8 o'clock Eastern time, we'll reopen our trade room. Every morning, just after 8 o'clock Eastern time, we prep our charts, we do a little mindset routine, and we trade together every morning. If you're sick of missing the best trades each day, if you're taking too many losses, if you're making too many mental mistakes, the best place to be every day is in our morning trade room. We'll be there tomorrow morning, 8 o'clock Eastern time. I'll put all the membership links, I'll put all the free course links down in the description of the YouTube video, so don't be afraid to grab those links. Get registered. The easiest way to get help with anything we've talked about here tonight is to call the office or send me an email. I do check the comments in the comment section below, but I don't get to them as fast as I probably could. It's a busy day in my office. So call the office, send us an email. We got live chat. Those are always the easiest ways to get our attention, especially if you have questions about the free course or about the best brokers, or if you want to, right, or if you want to pull the trigger, right, and come out and trade with us every morning as a brand new student. So don't be afraid to call the office. I'll be here to help out with any questions that you might have along the way. But that will do it here for tonight. Hope you learned a bunch. Hope you use this knowledge, this strategy to make a killing tomorrow. Don't spend it all in one place this weekend. And we'll see you guys back here, if not tomorrow morning as a student in the trade room. We'll see you guys back here on Monday. We'll do it again on Monday afternoon for a very big week, an election week ahead. You're not going to want to miss next week's video newsletters. Guys, we're out of here. Have a great rest of your evening out there. Boy, what a World Series. We're going to go Game 7. It's looking like we're going to go the whole distance here tonight. A no-hitter. Are you kidding me? After a big rout, my goodness, I'm still rooting for the Phillies. I cannot cheer for the Astros. I'll tell you, though, they are a really, really good team. So enjoy the rest of the World Series this weekend. We'll see you guys, if not tomorrow morning, back here on Monday night. Be well, be nice to each other, and be here next time, will ya? Adios, amigos. Bye-bye for now.